Welcome to the Crypto and Blockchain Talk.
Hello. Hey. Guten Tag. Aloha.
Hola. Shalom.
Hallo.
Namaste.
Ni hao.
Privet.
Hello.
Salut. Yassas.
Salve.
Ciao.
Bonjour.
Our podcast talks about the latest trends in the worlds of cryptocurrencies and the blockchain.
Hello, everyone, and welcome to the latest edition of Crypto and Blockchain Talk. And today with me is Thibault Schrepel, who is the author of Blockchain and Antitrust. And there's no one I would trust more to cover the news with me than Thibault. So hello, Thibault, and welcome.
Well, thanks a lot for having me. I'm delighted.
So am I. It's going to be exciting. And my name, by the way, everyone, is Aviva Õunap. I am your host. So there is a world of news happening, and we are spoiled for choice. So, and the fact, Thibault, you're a lawyer. Well, I'm saying that like you didn't know.
I was told. I was told.
Okay, so I should put that more in an explanatory kind of sentence. So Thibault is a lawyer, so we should be able to get some really interesting viewpoints on things that we're going to be talking about. And I think what we'll start with is MicroStrategy and their execs selling off their stock after a Bitcoin bull run. So let me give a little bit of a preface here. And that is that MicroStrategy executives have sold off nearly 175 million in company stock over the past year, cashing in on a bull run in both companies sharing Bitcoin prices. Now, Bitcoin makes up a significant share of MicroStrategy's value. I think other investors are going to be wondering if holding Bitcoin is the company's only remaining purpose. So, in the first instance, do you think that this is anything, if you had any kind of stocks or shares in MicroStrategy, is this something that you think they would be scratching their heads at?
Well, it seems to me that the question becomes, why would you want to hold those shares instead of just holding Bitcoin? And from a legal perspective, sure, you do have probably, if that's the only thing you're doing, you have to change the status of the company. But I'm not sure there are more problems than that. But again, from a business perspective, I'm not a business analyst, but it seems to be kind of curious to put a new intermediary in between of yourself and your Bitcoins. So why would you do that? I'm not too sure. Do you have more background maybe on the strategies of this company?
Well, I can tell you actually quite a bit. We've reported a lot on MicroStrategy. Let's put it this way. Okay, so MicroStrategy's market cap on NASDAQ is around $7 billion US dollars, which is apparently over $720 US dollars a share. Now, in case you didn't know what MicroStrategy does, they're a moderately successful software and business data analytics provider. And they basically did nothing for, in my opinion, to get attention until they started on their massive Bitcoin buying campaign in 2020. And they started off with a 2.2 billion US dollar purchase of Bitcoin. And since then, that's what their MicroStrategy strategy seems to be all about Bitcoin. Now, Michael Saylor, who is a self-proclaimed god in this space within crypto, I mean, I don't know, that's his own standards and his own, he's the captain of his own underpants kind of thing. And, he has praised the benefits of Bitcoin, and he said that he doesn't plan on ever selling his own interests in Bitcoin, and he's going to keep it for a time when it's the only currency that the people in general, the masses, trust. But the funny thing is, in 2013, there's a tweet where Michael Saylor said Bitcoin's days are numbered, and he trashed it basically. So just like JP Morgan once upon a time said, oh my God, what is this SH1T Bitcoin stuff, and then went out and actually started to really roll into the space. It looks like that MicroStrategy did just the same. So in terms of what's happening right now with this selling off of stock, there doesn't seem to be really much more about it except for that one sentence about this sell-off, except for this little soundbite saying that this 175 million is part of a total 270 million US dollars in stock sell-offs since October of 2012, which is, quite a number of years ago. It just seems to me to be very interesting that a company very vested into Bitcoin would just be dumping their own shares. But I mean, the execs, I should say, their own executives are selling off this company stock. So I just think it's a kind of a weird strategy to be a company executive selling your stocks with this kind of value.
And again, I mean, the name of the company has the word strategy, and it would seem like it could have been a strategy to trash Bitcoin and other cryptocurrencies on Twitter so that the value will decrease if you are very influential, so then you can buy more and then, wait for the price to come up. But as you mentioned, JP Morgan and many other companies have been trashing Bitcoin probably because they really thought at the time that this was a good idea to do so and that it will disappear, and eventually realized that this wasn't the case, at least not as we speak. So quite interesting, I would say, to see that a company about strategy actually showed publicly the absence of strategy, or at least, long-term vision when it comes to crypto. So again, I'm not too sure if that's the company I want to invest in, but I'm not a business analyst. So if you want to go ahead, please feel free to do so, of course.
Just in this last year, CFO Fong Li and CTO Timothy Lang have sold off $55.8 million US dollars and $44.9 million US dollars in company stock, respectively. And then with 6 other people who they haven't named, that makes up the 175 million in total over the past year, which is astonishing. I mean, that's a hell of a figure, isn't it? These guys don't even have to work anymore. They should have retired on the day they cashed in.
Indeed, it seems like this is the type of, story that you hear about, and to some degree, this is probably why cryptocurrencies are attracting, the press and such an environment. I'm not too sure this is what we want. Sometimes, and I've heard that many times, and I thought, well, this is kind of stupid, and then I kind of agree with it, that at least when the values of the main cryptocurrencies are going down, then of course we talk about that for just a few days, and then we can talk about the other applications of blockchain and potentially discuss the long-term vision instead of just speculating and trying to cash in as soon as you can. So I don't want to give the impression that I'm just a skeptic of, people making money, but to some degree, this is great, but I wish we could talk about, money-related issues also.
Absolutely. Well, going over to another happy story. I don't know if you're going to turn to drinking after this, Thibault, but anyway, Tether, again, has been in the news. One of my, I don't even know how I can say this with a straight face. I was going to be very sarcastic and say one of my favorite stablecoins, but it's absolutely not. Tether is desperately, apparently, trying to stop the New York Attorney General basically releasing results from a probe they did from going public. Now, you see, I find this stuff fascinating, and this is why I love the fact that you are a lawyer. You will be able to give some insight to this because they've been in so much trouble for a lot of wrongdoing. They're not allowed to actually raise their head in in New York. I don't even think you're allowed to buy Tether at all with anybody in the state of New York. And there's other places in America who are actually looking at this case and paying close attention to it. But from the investigations done by the Attorney General of the state of New York, they had to basically become more transparent and show, because this is what the whole issue arose from, in that they did not have the fiat currency or any kind of backing to their stablecoin, because originally when they came out, they said that they had $1 for every stablecoin. And then, of course, with a little digging, it showed that they basically had belly button fluff and lollipop sticks to back their tethers. But something's happened where the company is objecting. They don't want basically for their information to be released to the public. And they do not want, even though they're supposed to be transparent, to be for people to see it, which I think that they would want people to see, because right now, anyone in this space, considering what's been going on with Tether, they'd be very, very suspicious, skeptical about how Tether is running its business. Tether actually get away with not having to disclose this information that they were told they have to disclose?
So I'm happy first to see that my obsession with antitrust laws could be put to good use, because in the case that you described, antitrust was indeed at the very center of it, because the plaintiff argued that by flooding the markets, and especially the Bitfinex exchange, with those Tether which were not truly backed with $1, they actually abused what the plaintiff said was their dominant position in the stablecoin markets. So they said they had 80% of that market, and they lied, and this was basically an abuse of their dominant position. So we will see what court will eventually decide on this case. But first of all, a big shout out to two researchers who first came out with a study in 2018 explaining and showing the entire practice. So see, the academic community could be of some good use sometimes. And then we'll see on an antitrust ground if indeed this holds. I'm not convinced, potentially for one big reason, which is that it will be hard to prove that Tether was able to lie because they were dominant on the market. It seems to me that any stablecoin could actually say the same, pretend they are a real stablecoin when they are not, regardless of their market power. But leaving here antitrust a bit, I have to confess I'm sometimes puzzled with this case, because I've seen so many of the centralized actors going after Tether and saying, see, what's happening with Tether is just one isolated example. It is actually happening with the entire blockchain ecosystem. This is the proof that this is wrong. This is why you need centralized actors and someone you can trust, etc., etc. So I think we have to be careful in trying to explain that, although some developers were able to do what they've done, this potentially is not representative of the entire ecosystem. They may pay actually quite a lot of money for that. The plaintiff are asking for $1.4 trillion as damages and compensation. So we'll see how it goes. Going back to your question, I will have to read the exact judgment. All I can say is that if indeed a court is asking for documents, then you do have some regulations protecting business secrecy. But if a court is ordering it, I do not see any reason why the company shouldn't actually provide the documents to the courts. And depending again on the decision, which I haven't read, but it could be that you give some strengths and that you will eventually say to the company, every day that passes by when you haven't given the document yet, you have to pay such a fine. So it will depend on what's in the decision, but I wouldn't be too surprised if they eventually show up in court.
Yeah, you see, it really confuses me, because when you really look at what's going on with this whole case, for instance, you also have Tether admitting that they considered the disclosures that they made to the New York Attorney General as being only to the New York Attorney General, but they've also, it looks so a little comical, because it also appears that, or it's now even been confirmed, allegedly, that what they've been showing to the New York Attorney General is actually a totally different document than what they were supposed to do as part of the requirement of the settlement agreement. So I don't really understand who gets away. It seems to be almost like, again, how do they decide who gets away with it and who doesn't? For real. How do they decide? Because this, to me, if it was a NASDAQ company, I have a feeling a lot more would be happening. So what's going on?
So short answer is that no one should get away with it. And if indeed you are asked to provide the court with some documents, you should do it. And again, you could be sanctioned for that. So I'm not too sure exactly about the actual judgment. This would be very interesting for me to read, actually, and potentially all the companies in the space. But as it stands, it seems to me that they have no choice but to provide those documents to the court. And then, of course, they're right in that they are actually just giving those documents to the court, and they may ask for some information to be put away from those documents the day they go public. In the actual record, you have lots of systems you can use online. I'm not going to give name, but where you can actually access all the docket activity of a certain procedure. And most of the documents are made available. But if some information is sensible, meaning that competitors could actually use it against the actual company disclosing the information, then this indeed could be put away from the actual documents. So this is all I can say, I'm afraid, when it comes to this case.
Well, I will close out with a quote from an anonymous source from the Office of the Attorney General, who basically said, sorry, I'm already laughing. Considering Bitfinex had to recently move $500 million from Tether's bank account to cover up the loss of almost $1 billion worth of client funds, it is apparent that no Tether is ever being redeemed. So I don't know what to say except for let's go on to the next news piece. Oh my God. Oh my dear God. What do you do? Okay.
And maybe some more numbers. The plaintiff was arguing in this case is that they actually lost $466 billion because of the entire manipulation of the markets. So, yeah, this is quite gigantic, to say the least, I suppose.
Really? Wait a minute. No, but wait a minute. But give a little bit more body to that. What?
So they said that eventually, because of their practice, a bubble was formed and exploded.
Because of Tether's practice.
Yes. And that it was actually a way also to inflate the value of Bitcoin, and then eventually went down. So I'm not too sure how they've done the math to come up with that number. You know, it may have been when Bitcoin was down last year or 2 years ago for some weeks. But they are indeed arguing for a loss of $466 billion. And this is why they are asking for compensation and the amount for the compensation they are asking for is $1.4 trillion. Because in the US, what you could do is ask for treble damages. So you triple the amount of the loss you have suffered. Not in all cases, but here in this case, this is what they are asking for.
We're in the wrong business, Thibault. Okay, so let's move on now to Litecoin, because apparently, as you know, and I don't know if you remember from years back, and almost every cryptocurrency except for Bitcoin and Ethereum, I just remember lots and lots of fake news going out about like companies would say, oh, our coin is going to be used by, and then they'd name an international global brand, you know, something that was pretty wide. Then it would be dispelled. For instance, I'm trying to remember which one of the top 20 coins said that they were going into a big deal with Microsoft. Microsoft then turned around and released a press release, and they said, this is not true. We are not going into a partnership with this cryptocurrency. And then this crypto, which I'm trying to remember the name of it, let me see if I can remember the name of it, then had to finally admit that they pretty much lied. They just wanted it, they thought this would be a good marketing technique to get their name out there, which, by the way, it did work. It ended up being picked up by every single major channel. Anyway, I can't remember which one it was, but the same thing has kind of just happened again. Apparently, Litecoin has made it made some kind of statement and released it out to the open, to the waiting world, saying that they were going to go into some kind of payments partnership with Walmart, which is a huge retail chain in the United States and Canada and I think a few other places around the world. And that has just been debunked. And this is what happened. The same thing is what happened with this other company whose name I can't remember when they came out and they said they were partnering with Microsoft. A bunch of mainstream news outlets like Bloomberg and CNBC and Reuters basically, reported on this press release that Walmart was doing this partnership with Litecoin. And of course, Walmart said, this is not happening. We have no idea what you're even talking about. And so it's fake news. Now, you see, the funny thing is, though, until the bogus claim wasn't debunked for days, right? So you then had all these people who thought to themselves, oh my God, one of the biggest retail chains in the world, if not the biggest, is going to be using this coin. Of course I'm going to invest in it. So, because that's exactly what pretty much happened. Because it sent the value of Litecoin skyrocketing by a third. Yeah? Within 30 minutes of that peak. Yeah? And Walmart issuing their statement, it sunk back to their previous level. And it took everyone's credibility with it. So why is it, do you think, first of all, that people rush when they see that, why do you think it is that people rush when they see a major company using a cryptocurrency? I mean, if they didn't invest in it now, why do you think, especially because they probably don't even understand it, but why do you think people would rush into something just based on something in the media? And if people knew anything about the media, and I know I'm actually doing a podcast, that actually probably blankets me as well. But why would anyone just trust anything that is just blindly said to them without waiting to see if that information is real?
So for the second part of the question, I am afraid what you need is a psychologist or behavioral, scientist.
I know the answer. Greed.
I know. Well, and it seems that, the same answer could actually be given to the first part of the question. I mean, I'm not sure if you have ever seen those cryptocurrencies groups on Facebook and all the social medias. I mean, Facebook is not the only one where you have millions of users part of the group. And first of all, it's kind of a nightmare to be part of those groups because literally every second you do have a new message and it's a scam trying to get some of the money away from your bank account to theirs, of course. But I mean, I suppose this is why you will see, someone putting the message, Microsoft or whatever big company is using a new crypto, and you the feeling that if you invest, then the value will go up, and this will be good for you. Then my question for you, while listening to the news, was, what is now the value of the Litecoin, if indeed we are talking about this one? But you said it's back to normal.
It went back down, but then it shot a little bit back. It shot back up. So, I mean, it hasn't, it's always hanging around within 180, 181, 182. It peaked at almost 184 a couple of days ago.
So my suspicion is that it could be that the story we are talking about is in fact more complex than what we think it is, because it seems to me that, if you cannot trust the core developers or whatever, or the foundation behind a crypto to actually provide us with some proper and accurate information, it seems to me that the value will go way down, way before, the scandal. So, and again, I'm not aware of any of the fact in this particular case, but it might be that they really thought they had a partnership with Microsoft, or, something a bit more concrete than just thinking, let's try to scam everyone on this one. I mean, it could be. What I do want to make it very clear is that the FTC, the Federal Trade Commission, is very much concerned with all that. And the Consumer Information Bureau is actually putting out lots of documentation about cryptocurrencies and scams. So, this is something that happens on a daily basis, hourly basis probably. And this won't be, if this is indeed such a case, this won't be the last time. But I wish, if indeed this is true, that the value will just crash for good instead of just going back to where it was before.
When this press release was released, it went from 182 to 231, almost 232 actually.
Okay.
Which is unfrickin' believable if you think about it. Somebody obviously made a shit ton of money during that peak. Yeah, if you think about it. It's the same thing as what happens with, a lot of this stuff happens, but you have to just be very wary. And I guess the message here is to everyone who's listening is don't just take anyone's word for it. Just because it's on the internet doesn't mean it's true. You have to read still a lot of stuff. And I know it's really hard to do when you do have reportedly or reputedly professional outlets like Bloomberg and CNBC picking up on this stuff. But I guess what they should have done is they should have called Walmart and not just picked up a press release from Litecoin and ran with it. They should have also called the other people in the article and said, is this true? Because guess what? It would have been a very different article that was written if they had called Walmart, which is what good journalism is about. You call both people involved in the story. I mean, don't you, Thibault? Wouldn't you expect that? If you have an article saying Litecoin partnering with Walmart, you would think that they would call Walmart as well as talking to Litecoin. Don't you? Don't you think that would be just normal?
It seems like it. But then again, competition is not always good. So competition between new outlets is also, the reason why you want to get the story out there before everybody else. And this leads to this kind of problem.
Yeah.
But there is something which is more from an enforcement perspective and more forgivably than just users such as you and me. But what's very interesting in my view is that it used to be 20 years ago when looking at centralized companies that you kind of knew where the order and the influence was coming from. The CEO, the shareholders, they were giving direction. And now it seems that with those decentralized communities, you have actually such vertical organization of the cryptocurrency does not exist anymore, but it doesn't mean there is no power inside the ecosystem. And an influencer and to be able to put out a press release or to tweet something about it and then to move the value of a cryptocurrency by up more than 30% is actually such a big power that you do need to include those people in your analysis. And this will take some time because regulators are not used to work this way, outside of what appears on a piece of paper as being the legal organization of a group. And yet it seems to be more than relevant. I mean, we hear such stories all the time. So the influencers and the power of the coders and the foundation and all the people with, playing the role of a guide has to be included in our legal analysis somehow. Otherwise, this will keep on happening over and again.
Well, you mentioned the regulators, and I think there's a lot of news this week about what's going on within the space for regulation in terms of Singapore and South Africa now joining the list of countries who are now warning against Binance, and I'm not being funny. We covered this a couple of weeks ago where the U.S. authorities were already deeply looking into Binance to the point that I actually think I did say a number of times that CZ must be changing his underwear in a dark corner somewhere constantly because you don't mess around with the SEC in America. They do have that long arm of the law and they have a lot of reach. But it looks like now the authorities now in Singapore, the SEC in Singapore and South Africa have now warned that Binance is in breach of their laws. And that is quite incredible. Again, this goes in that vein of there's been no regulation or legislation for forever, since day one. Now that all these companies are so entrenched, you see people basically lining up to say, we don't know how long we're going to tolerate this. Now, in a notice that was actually released by South Africa's Financial Conduct Authority, their version of the FCA. They basically described Binance as an international company situated in the Seychelles with a Telegram group that members of the South African public can join to gain access to their cryptocurrency exchange platform, which I think is kind of a strange way of describing Binance. But regardless, their FCA, said that crypto-related investments are not regulated. So they're complaining about them, but in the next breath they say that crypto-related investments are not regulated by their Financial Conduct Authority or any other body in South Africa. So it's kind of a little bit of a mixed message to warn against an exchange, or maybe not a mixed message, it's just a bit of hot air, because, saying, hey, listen, beware of this exchange, but by the way, we have no authority to actually regulate this stuff, so, you can do what you want. I mean, what does that even mean?
And I mean, I think you said it all. It's weird, and this is not actually something new. And here I'm going to play for just, I promise you, 10 seconds, the role of a professor of law, and mention a scholarly paper, which is one of my favorites ever written. It's that paper is entitled "Cyberspace and the Law of the Horse" by George Easterbrook, and then Lessig, another professor of law, answered to that paper, and you have two different views. And what this paper is about is a judge in the United States arguing that we do not need new laws when it comes to the cyberspace or internet, because we can actually apply the laws such as they exist already, contract and criminal law and civil liability, etc., etc. And the answer given by Lawrence Lessig was that sometimes it might be necessary to have a very specific law so that we can eventually apply the laws such as we know them. And it seems to me that this very dialogue between the two is exactly what you have in the country. On the one hand, you could say there is no proper regulation, but if you say that, it means that you imply that you only talk about, financial regulations about exchanges for crypto and blockchain markets. But surely you can apply financial laws such as they exist already to those exchanges. The question becomes, are they adapted? And if not, what do you do? Do you change them? And I can see indeed why, they, on the one hand, say no regulation, but on the other, be aware that we're going to come after you, which probably means that they're going to use the regulations such as they were voted potentially 20, 30 years ago against cryptos, which is creating lots of problems. But to that, and the balance between the two is something which is really hard to achieve. And I mean, we are trying the best we can, but I'm not too confident we will actually come up with a legal ecosystem which is coherent. Law companies such as Binance do know exactly what they should do to comply with the law.
Letters have actually been posted all over social media from the SEC saying how they're looking into Binance and the way that Binance is operating and how they're actually dealing with customers. And when they asked CZ, he actually shrugged off, apparently, all of these, what he said were non-truths. He basically said, no, the SEC wasn't looking at Binance, but it was proven to be, as per usual, false. I find it quite interesting when people show receipts and you have the people saying, no, the SEC isn't looking at us, and yet you have now the official letter from the SEC, which has been printed all over social media. You can find it anywhere now, addressed to Binance, and basically, they're looking at it. So now there's a huge list of countries. As we already mentioned here, we have Singapore, South Africa, the UK, Netherlands, Thailand, Malaysia, Japan, Germany, and the list goes on. There was a piece about how some banks have issued this seismic warning about how crypto could replace the dollar in just 5 years. It's got such a market cap that they see this apparently just growing. But of course, we could maybe take this with a pinch of salt, because there's a number of stories out there like this on any given day about how banks are looking at crypto as being something of a challenge in the future to what they actually offer, or a challenge to fiat currencies. But then you have other people who are just as robust in the way that they're actually saying, this crypto stuff is Ponzi or whatever, or it doesn't have a store of value like gold. I mean, I really have to question who the hell they're interviewing. And like no direct quotes attributed to actual banks. And, because which bank do you think would say that crypto will replace the dollar? Can you think of any bank that would actually want to go out with that kind of message?
Good question. My instinct would say probably a bank with a lot of prior investments in the blockchain ecosystem.
Yeah.
Because otherwise, I'm not too sure why you would say that and try to, be a proponent of that. Or it could be a way also to scare regulators away and to say, look, this is happening. Therefore, we need regulation to take the crypto space, down, which is also something that you see all over the place, even outside of crypto. When there is a new competitor on the markets out there, if you think you cannot compete, then what you do is that you ask for regulation against it, and it works. So it might also be, that this is just a strategy. But who knows? And I think it's funny to see that we are finally starting to discuss those very important issues, when in fact just a few years ago all we were talking about was the criminal cases related to crypto. For the most part. And if you look at the numbers, and I've done the empirical study myself, so I can assure you of the numbers, 35% of all cases involving crypto before US courts are criminal in nature, which is quite a lot. But also 80% of all cases are civil in nature. So they relate to contracts or related issues. And of course, I know it's weird because if you add up 35 to 80, then you end more than 100, but sometimes they cover, a bit of criminal and a bit of civil cases and matters. But it means that it is actually, the number one issue. Criminal activities is not the number one issue before the courts. And finally, in the media, we start talking about the civil matters and the competition between the crypto and the state and all of those very important questions. I'm not sure why the rationale and the discussion has moved, but I think it's great that we actually discuss, and what we do right now, I think, is very important.
Well, it's going to get even more important because the SEC chair, Gary Gensler, who you and I have talked about him before, I really think he's going to come down on this whole crypto space like Thor putting down his hammer. He's going to flatten, I think, everything as thin as paper. That's what I think. Just recently, the Senate Banking Committee, which meets in the United States government, lawmakers were denouncing Gensler and the SEC's approach, accusing Gensler of stifling innovation and increasing the costs for investors into the crypto space, which I'm trying to understand now. I'll repeat that. So lawmakers denounced Gensler and the SEC's approach, accusing him of stifling innovation and increasing the costs for investors because Gensler he has a plan to regulate currencies, which is coming under fire. Now, it's really interesting that they would say that or even take that stance, which makes me believe, A, that either Ted Cruz is correct and they don't understand how crypto works, or B, that the very people who were sitting in there denouncing Gensler had very, very big investments in crypto themselves, and allegedly. And by the way, I'll do a disclaimer. Anything I say on this show, anything that Thibault is saying, is basically our opinions and our opinions only. Please do not take any of our advice and do anything with it. Please please use your own research abilities and due diligence in order to research cryptocurrencies we may mention on this program, and do not invest in anything you do not understand, and please go get yourself a professional investment advisor. So going on with that, I'm just going to keep going then. And you're a lawyer. Was that good enough?
Yes, that was great.
Okay, great.
Aim into that.
So he's coming under fire because also, and this I thought was very strange, They were questioning Gensler on whether he believes that stablecoins maintain their value relative to the U.S. dollar or securities under the definition used by the Supreme Court. Okay, and Gensler answered, "Well, they may well be securities." And then one senator named Senator Toomey, and by the way, I don't know any of these people. So Senator Toomey said, "To me, a stablecoin doesn't meet the second prong of the Howey test, that there has to be an expectation if it's from the investment. If it doesn't meet the Howey test, it looks to me like it's not a security." Now, in the case of stablecoins, that may be the case. So he would be correct on this one, maybe. But in terms of cryptocurrency in general, and basically regulation and legislation, another senator said, "As to the people and the companies you regulate as chairman of the SEC, why do you consider yourself to be their daddy? Why do you impose your personal preferences about cultural issues and social issues on companies and therefore their customers and their workers?" Now, I'm not being funny, but shouldn't they be worried about those customers and workers who are the very people, they're the retail investors of the world, they're the people who, for instance, read these articles about Litecoin and Walmart, which turn out to be fake, where those very customers are losing money based on nothing but hot air? I mean, shouldn't they be propping up Gary Gensler and saying you should be looking into responsible regulation and legislation? I mean, shouldn't they be supporting this guy? It looks like they beat the crap out of him during this committee. They were basically not very supportive of the SEC regulating this space. I mean, what do you think is going on there?
Well, again, that's all I have to say. No, but I mean, it's really hard, of course, to know what's happening behind the doors and, the political battles and all that. But it seems surprising, indeed, just reading the statements that you have given us. It seems that to say that because regulation is coming in the space, it will actually hamper innovation seems to be wrong. If you look at the surveys, and there are lots of surveys on the topic, so we'll just quote here one survey that I have in front of me, made by PwC. They've interviewed, I think 2,000 business leaders, and it was 2 years ago. And what came out of the survey is that 48 of them were saying that the reason why they were not investing as much as they wanted to is because of the lack of regulation in the space. And this was, by the way, the number one reason for which they were not investing as much as they could have. So it seems regulation in itself is actually pro-investment. And by the way, there are historical works also on this issue, including one by a Nobel Prize in Economics, Felth, who published a book called Mass Flourishing, in which he actually explores how regulation can help investments and innovation. But of course, the question which is more interesting is then, which regulation do you want? And then when we comes the discussions regarding the OE test and whether a token is a security or utility, I think this is indeed a discussion we may want to have. And not for just the sake of, having a strong financial regulation. This is very important. But to be very concrete, if you say that most of the cryptos are securities, then for everyone listening to us, it means that you basically have to fill out way more papers than if you just own a utility, which creates a disincentive to actually own such tokens, and which means in turn that actually you slow down innovation and you slow down competition between blockchain and the big tech giants, right? When on the contrary, if you do say, well, most cryptos are utility, then it creates an incentive to acquire them because it's much easier, and therefore blockchain may compete with the outside world, whatever that is, more efficiently. So this is kind of the economic battle, which on top of the political battle is something we have to consider.
Just keeping on lines with Gensler. So Gensler signaled this year that he could be open to a Bitcoin ETF. It was the subject of many articles, but was as long as it complied with the strictest rules for mutual funds, which was in contrast to most applications. Now, apparently, Fidelity, which is a big investments house in the United States, during a private meeting, now I don't even know, I guess there's filings about this which have been released, and I don't know who released this, but Fidelity Investments have been urging the SEC to approve their Bitcoin ETF in this private meeting, I should stress again. So, maybe it happened, maybe it didn't, but apparently executives, including Tom Jessup, who's the president of Fidelity Digital Assets, had a meeting with SEC officials on a video call on September 8th. And they basically were trying to push very hard for their ETF to be approved. Now, many companies like Fidelity would love to see that happen. With companies like this who are having these calls with SEC and pretty much either pushing, I should say, if they wanted to do this and they wanted to really make this happen, why don't they just comply with everything, and then instead of having what I would say is kind of like backroom meetings, which end up, I think this is embarrassing to have secret or private phone calls being, put out to the world like this, because it shows that they're trying to do something which the SEC is currently trying to make rulings on, but in the right way. So do you think that having these kinds of backroom meetings, especially with government officials, do you think that this is something that maybe SEC should not even be having? That they should say, just put it in a letter, let's, just put everything down so it's open and transparent? Because the fact that it's actually out there, I wonder who released it. I really don't know how this got released, but do you see what I mean?
I do, and it seems that whether this is true or not, by the way, it has to be true sometimes, and it also means that some information is shared without us knowing all the times, right?
Yeah.
So, and this has been a long discussion and how to regulate, lobbying activities even. Not that Fidelity is, potentially, if indeed this is true, they were lobbying for their own interest, but this is a discussion that I think we have to have. On the one hand, I would be in favor of saying, everything has to be transparent, just put it in writing, no such meetings, because we have so many examples of what has been called regulatory capture, which is one private actor going to the regulator and asking for special regulations, whether it is to favor them or to be against their competitors. We have lots of such examples. On the other hand, if you do say no dialogue, even informal dialogue between the regulators and the private companies, then you potentially lose quite a lot of very useful information for the regulator to understand the market and understand what's happening and come up with the best regulation possible. So I think there is a clear balance, clear but also very difficult balance to be struck here. Something which seems to me is a good idea, but again, as you said, personal opinion, would be to at least disclose the list of meetings, if not the content, but at least, as a commissioner of the FTC, of the SEC, of the European Commission, as a member of Congress, the European Parliament, those are the companies that I met with during the last year. A proposal for that has been put on the table before the European Parliament, and it was rejected. And this, in my view, is a shame, because I would love to know that the person I have elected is actually meeting with companies, first of all, to know that they are getting to the right information, but also, to be more careful if such regulations come out and favor one of the company. I could then have my doubt as to whether, this is a regulation for the people or just for a specific company.
Well, I agree with everything you just said. Absolutely. But don't you think that now, many years later, don't you think that regulatory bodies have more than enough information to make concerted and diligent decisions, but really protect the individuals who have been burned? Don't you think that there's been more than enough time? Do they really need to have any more consultation? I can't even tell you how many consultations I've responded to that the SEC, the CFTC, anything with a C on the end, anything you can imagine, they've had thousands and thousands and thousands of responses when they have and not even asked for them. I would say that if anything, it's information overload. So I would think now, considering that they are going into Thor hammer mode, I would think that now would be the time that they would say to people, listen, we're not having any more meetings with people. We're right now very busy trying to figure out what the hell this space is going to look like. We understand that, you have questions, etc. You're just going to have to wait. If anything, I think they should wait. Whatever they come out with, one day, there's going to be some new rules. And you and I are going to sit back and we're going to be either laughing, crying, clutching our hearts, or as I always say, changing our underwear. We're going to be having some kind of reaction. And it can either be for a lot of people in the crypto space who are operating as, as the coins or the blockchains in this world. It's either going to go very well for them or they're going to be having temper tantrums. Correct? There's a lot of excellent stories about blockchain. Blockchain is a technology, frigging awesome. But when we're talking about cryptocurrencies in whatever form, just any digital currency, I think that the legislation that will be coming out from every country soon is going to be harsh. That's just my opinion.
I'm not sure I do agree on the one hand that information overload is a big issue. And especially in that space, we discussed already today together all of the issues that come out with the wrong information being printed and, eventually spread out by the press. And this is indeed a big issue. But we also know there are some actors and players that we can kind of trust. They put out good information most of the time, including this podcast. So they are omniscient here. But I do think that there is a need for a constant dialogue between actors, private actors, and the regulators. If they had discussion, the private actors, 1 year ago, they would have talked about the NFTs. And I do remember presenting at a conference in January of this year, talking about NFTs, and everyone was looking at me as if I was, just coming with my UFO and such a weird guy. And this is actually saying something which is very interesting because you actually do want to be in touch with what's happening on the market, and it changes all the time. So I'm not sure if we can say we have enough information now, let's just do something. When it comes to crypto and cryptocurrencies especially, for the last 5 years, they've taken the same form, more or less, the same protocol, the same consensus, but this might change. And the issues, if you use proof of work or proof of stake or proof of elapsed time or whatever, are way different. But the thing I want to say is that if you think we should regulate cryptocurrencies, the question will rapidly become, do you regulate this specific use case? And can you do that? Or do you need to regulate the layer one of the blockchain to tackle the issues for real? And often this is the way to go. And it means that you impact all of the use cases of that particular blockchain. And so for that reason, again, I will argue for more dialogue, but at least I would like, as a citizen, to be aware of which companies, public institutions are consulting and having meeting with. And of course, and this is, to defend my own castle, but something that I like in the US and that I dislike in Europe is that the academic community is audited and listens way more in the US than it is in Europe. I can see professors of law and people, doing lots of research in the space, going before Congress and explaining all of the issues. And we mentioned already, the Feather case was actually disclosed by 2 academics. And this is something that we do not do in Europe, and I think we should. I'm not saying the academics have all the truth. There are lots of issues in the academic communities, but at least, potentially they could present one piece of the puzzle, or, as you say, one piece of the coin that is not being hurt otherwise.
Everyone needs to have their say, for sure, but it's not really going to be the case, is it? We can't all have our say. We can't. It's impossible.
public institutions do consultation. And indeed, it is a way for everyone to, have something to say. And of course, everyone has always something to say about everything. So they receive lots and lots of contributions. But what I regret is that very often we do not have a report coming and trying to summarize all of the contributions. So it seems that it is sometimes used as a convenient way to just extract the information that they wanted to and they were looking for in the first place without really listening to what the people have to say. And so again, this is a way in which we can actually merge a bit more of what people have to say with our institutions, which are very much centralized in nature. And I wish sometime we could decentralize them a bit, so to better understand decentralized communities such as blockchain communities. So just something I wanted to add.
What I will say is this. The SEC, last time they asked for responses on a piece of legislation that they wanted to get opinion on. If I remember correctly, it had 8,500 responses, all of which you could read. You could read every single one of them. There was a general consensus. I mean, I know it does take a lot of time and energy, and not everyone has the time or energy to read 8,000 responses. All government entities now around the world, considering the length of time that crypto and blockchain have been going on for, I think they have more than enough information to just be getting on and making some preliminary laws with, and then going out there and maybe asking people.
It's important for public institutions and regulators to acknowledge that there are different views, and to say it out loud, or at least to publish it. And there are lots of tools we could use nowadays. We could use OpenAI or, other machine learning system to actually summarize all of the contributions for you. So you don't even need to do that. Just read, what's coming out of those technology. It seems to be something which will be sensible doing. And what I do want to say is that there is potentially a different level of expertise when it comes to financial institutions and public institutions and other type of public institutions. I'm talking with quite a lot of competition agencies, and I admire that. They have a strong willingness to understand the technology, which is great. But sometimes you will be actually quite puzzled to hear a level of expertise, which is literally non-existent. And the same is true for certain intellectual property agencies and consumer protection agencies and data protection agencies. And it seems that sometimes it is hard for them to even know where to start because, as we discussed, it's huge now. I think there is a need for dialogue and to find ways to aggregate all of the existing information still.
You mentioned NFTs before. NFT volume at OpenSea dropped 50%. After a massive August spike. So in September, so far it's fallen by 50%. But Binance is going to auction Da Vinci's and Van Gogh's. Da Vinci and Van Gogh NFTs, I should say. So just to make it very clear, you are not buying a Da Vinci or a Van Gogh or a Kandinsky or a Monet. You're buying basically what you can already get, which is a digital reproduction of the work. And the bid is starting at $10,000 US. I thought NFTs were really about going out there and doing like original art pieces, or even something that was more like fractionalized art where you do own a piece of an actual art piece. So you understand where I'm going. This is $10K minimum for a digital reproduction of a famous painting. Why do you think people would be interested in buying this?
So my take on pretty much every different kind of NFTs that you may have. One that you mentioned, something in real space that you just transform into an NFT, or you may want to create something which is only available in a sense in this form, in this format. I think the reason why it works, not always, but we've seen an increase in the volumes of those transactions, is not because people believe in it. It's because people think that other people believe in it. And so the reason why you may want to one 10K is because you think other people will eventually want to buy the same from you at a value of, 50K or 100K or even more than that. This is the only explanation why, people buy CryptoPunks. And by the way, I think they are very cool. But do I want to spend 11 million US dollars to buy one when I could just, in fact, and just use it, regardless of whether or not I'm the owner. And that's, by the way, one of the things I'm doing. I'm using one of the CryptoPunks when I create an account somewhere on a website. And of course, I'm not the owner of that CryptoPunk. But if I think someone one day will be willing to buy it for a value of 50 million, then that is the reason why I would to buy it in the first place. It seems like a Ponzi scheme, and you could say, well, that's all a scam and this is all bad. But to some degree, you could say the same is true for the US dollars, right? The reason why I want to have US dollars in my pocket or euros is because I know you also believe in it, and you believe that a piece of paper has actually some real value. And that's the only reason why it's working. I'm not sure if NFTs are that different than just, fiat currencies or any other cryptocurrencies at the end of the day.
Well, on that note, I will not be buying any CryptoPunk. Listen, I would go for something, an original piece of art. Even Jesse Dittmar, who I interviewed on this podcast, who's a very famous photographer, when you buy his NFT, you not only get the rights to that NFT, you actually get the photograph, the original photo, and the negative. I mean, that to me is true NFT kind of ownership, even if it was fractionalized, even if somebody said, listen, this is an original Kandinsky. I mean, they do that now with all different types of assets. But that's just redonkulous. These people don't even own what they're selling off, so I'm just beside myself. I mean, I understand that people want to make money, but I also think that there's a lot of better ways to kind of use your hard-earned money in this day and age. But I do care about what happens to people, and I think that there is a borderline. There's so much original art out there, so much original stuff, which is beautiful in my eyes. And, because obviously beauty's in the eye of the beholder. Art is very subjective. What I would think is great, you might not, vice versa. And there's enough of, and it's not just art, there's videos and music, and NFT represents so much stuff without even talking about things like land and cars and God knows what in real estate. But the whole point is that when it comes to art, there's enough original stuff out there that you don't go, hey, listen, we're going to take a painting we don't even own and we're going to make a pretty picture of it, and then we're going to throw our weight behind it. You have to also buy in BUSD. This is exactly the kind of thing that is putting us, like you even said before, in a bad place, in a bad space, because it makes people think, what the hell is that all about?
Yeah.
What is that about? I mean, why not say, hey, listen, we've collected the artwork from 100 children who have been identified as the world's next greatest artists, the next Da Vinci's. Now that I'd invest in. That I'd go for. Do you know how many talented kids are out there? Billions of them. Billions and billions. I mean, the stuff you see on YouTube of these really young children who can draw things that look like they're photographs, it's amazing. Just to me, it looks like just another money grab, and I think that's what pisses me off. I don't think that's what we're trying to achieve. Well, again, who am I to say what we're trying to achieve as the human race? It's just not my ideal.
And so something which is not a money grab and potentially on the lighter notes is a friend of mine, a professor of law in the US. And what he is doing is that he's trolling the SEC publicly, and he is actually selling this as a art performance and selling that as an NFT. And so you could buy part of it, and the more it goes, the more it receives answer from the SEC and letters, and then give that as a counterpart to you buying part of the performance. But to leave the space and the blockchain space a bit, what you just said to me makes me think about a interview that I was listening last night of George Costanza from Seinfeld. And it was actually, not in character, and explaining that he regretted, he regretted asking NBC to pay all of the actors and all the cast and the main ones $1 million per episode, because they got it, and eventually that hurt the entire cast and the entire family of Seinfeld. And for this reason, he thought this wasn't, a good thing, that they got the money they wanted. And so this is exactly what you are describing to me. You could make 40K, but this is not how you want to make money, and you think this is bad for the environment. I'm in the ecosystem here, so let's not do it. I will buy into that as well, I think.
Yeah, that's the only way that we can go forward. I'd like to thank you very much, Thibault, for coming on.
Thanks for the fun and the news. Thank you very much.
Well, the news is always fun.
I kind of have to agree. And this is why also I keep on investing my time in the space. And I suspect the same is true for you, actually.
Absolutely. I read so much. But I would like to also thank all of our listeners for tuning in to this edition of Crypto and Blockchain Talk. Please remember to tell your friends and family to download our podcast on one of the many podcasting platforms that's listed on Crypto and Blockchain Talk. Also, remember to tell them and remind yourself that this podcast also streams on our sister radio station, Crypto 24 Radio, which streams around the world playing 24/7. Furthermore, you can also give us really great comments on our social media platforms of Facebook, Instagram, and Twitter. But we love to hear from you directly, so please email us at savvydigital, that's education at savvy, SAVII digital.com. Again, we love having you as our listener. When you tune into us, believe me, we appreciate it more than you could ever imagine. So please be safe, take care, and goodbye for now.